Hey, welcome. I want to talk a little bit about CEO bonuses and employee behavior. This is the intersection of ESG score and neuromining. So, for the duration of the video, talk high level about real quick introduction of ESG, like what is it, ESG scores, and why it's important. And then we talk a little bit about BlackRock and what they are up to. I want to introduce a new term for some of you, but it's called neuromining. This is a real thing. I think you're going to find this fascinating and creepy at the same time. So let's dig in. So let's start right here. The ESG score and what does it mean? So, number one, around the environment. So, this is metrics on how a company interacts with the environment, including carbon footprint, energy usage, and waste management. Then, number two, on social. So, these are metrics on how a company treats its employees and the community, including diversity, labor standards, and human rights practices. Then number three is the governance. So these are metrics on how a company is managed, including the board diversity, executive pay, and its transparency. Just real quick on this, for those of you that may work at a Fortune 500 or a company in the NASDAQ or the S&P 500, if you pay attention to say what's on the all hands calls, you're going to hear ESG all over the place. Or if you look within the company intranet, it's littered everywhere. How do I know that? Because of the company that I currently work at, it is everywhere, quietly everywhere. Now let's chat about how ESG is reshaping finance. I thought I'd start here. This is at the 50,000 foot level or above the cloud level. But again, ESG is literally reshaping the finance industry. Number one, it's reshaping the finance industry in a number of ways. It's changing the way that investors make decisions. Investors are increasingly looking for companies that have a strong ESG profile, and they're willing to pay for premiums for these types of companies because investors are increasingly aware of the risk of associated with ESG in terms of which companies are playing and which companies are not. And then number two, ESG is changing the way that companies operate. And that's what I was alluding to just a few seconds ago. But companies are under increasing pressure to improve their ESG performance. They are responding by making changes to their business practices. For example, companies are reducing the environmental impact. They're improving their workplace diversity and inclusion. And right here, ESG is changing the way that financial institutions operate. So let's chat about this. Financial institutions are under increasing pressure to offer ESG products and services, and they are responding by developing new products and services to meet the needs of ESG investors. For example, financial institutions are offering ESG themed mutual funds and ESG linked loans. Real quick on this, you know how everybody's got a credit score? Now that companies have a credit score, could be one kind of basic example is if you are, say, Tesla, and you want to get a loan for whatever. So the higher the ESG score, the better the loan terms will be. And this is a mandate, by the way, by banks, like Bank of America is also leading the charge on this. But if a company, say Tesla, or if you're in the oil and gas space, because some of those scores are horrific, that means just because your score's low, then your terms are going to be much higher. So you're going to pay for it. So that's one of the big things that are driving these companies to have higher ESG scores. Again, one of the things or one of the reasons so they can get better terms. I thought I'd start just with some of the fundamentals before we really start to dig in. But this is Salesforce, and this is a headline that I wanted to share. So Salesforce ties executive pay to ESG performance. So this article came out in February of 2022. So when it comes to ESG and executive pay, to find new information on this, it's somewhat difficult. There is some, but the best headlines on this came out really from 2019 to 2022. But I just want to share that Salesforce as an example because they are leading the charge and they've been in this compensation for their executive staff really since day one. This is from Harvard Law School Forum on Corporate Governance. This came out again March of 22. The headline is The Evolving Role of ESG Metrics in Exec Compensation Plans. I thought this particular read does a really good job of breaking it down in terms of how the CEOs and their exec teams are bonused and metriced, and also they touch on briefly some of the percentages that these execs get. Not in this particular read, but I found some where the execs and the CEOs are getting, in some cases, up to 30% of their annual bonus is around ESG metrics. Just found this the other day, and this is by WTW. This came out May of 23. This is a global study on ESG incentives in the executive compensation. And what WTW research found is that 77% of major companies across North America and Europe include ESG metrics in their executive incentive plans. And this is up. So it's up plus 68% from last year. This covers a great surface area if you're interested in going deeper and wider in terms of how incentives are impacting executive comp. This is a good one. Now, we're going to go a little lower in terms of, we started at the 50,000 foot level. So let's now get a little more tactical. So ESG is a framework for evaluating companies, to put it simply. So let's start right here. The growth of ESG investing. So the amount of money invested in ESG funds has grown significantly. You may find this interesting. So it's grown significantly in recent years. So in 2020, the global market for ESG was 35 trillion. And now per Bloomberg, by the year 2025, it's expected to be $53 trillion by 2025. So it's going to be a player. And I talk about this here in a few minutes. Develop of a new ESG products and services. We touched on this briefly, but just think about financial institutions. They're developing new ESG products, aka say loans and services to meet the needs of ESG investors. So for example, banks, they're offering ESG themed mutual funds, which I talk about here too. Thought I'd start with BlackRock here in a few minutes, while others are offering ESG linked loans. Number 3, increasing demand for ESG data. Data's for sale, and anything ESG related on the consumer, it's going to sell. So investors and companies are increasingly demanding ESG data. This is driving the development of new ESG data providers and ESG analytic tools. As I mentioned, let's start with BlackRock. At last check, I think BlackRock has 9.1 or 9.2 trillion of assets under management. So I thought this would be a good place to start in terms of what is BlackRock up to. There are so many things that BlackRock is up to, but I thought I'd start with this. And I found this is ESG News. And the only reason why I wanted to share this with you is because there's several headlines that I found in this one screenshot. But again, this is just a random or a small sample set. So recent BlackRock ESG news. BlackRock launches new climate-focused ETFs anchored by a $3 billion investment from Illuminarian, if I'm saying that correctly. This is Finland's largest pension insurance company. And then right here, BlackRock launches Brown to Green Materials Fund targeting greening of the materials sector. BlackRock, Daimler, NextEra forge ahead with 650 million EV charging infrastructure for trucks. And I literally just did a video on Tesla from the investment analysis. But EVs, they're going to be between now and the decade. So this is a great headline. And then Altruist Model, for their marketplace, they launch a cornerstone partnership with ESG pioneer HIP investor. BlackRock raises $4.5 billion for climate-focused infrastructure fund. And then right here, BlackRock partners with Apex to bolster ESG data in private markets. So we're going to look at some technicals just for a second, okay? So iShares, this is the MSCI USA ESG Select ETF. This is managed by BlackRock. So this view that you're looking at, this is from TradingView, and they have these speedometers or these gauges. I just want to share this with you real quick. They've got different time frames, so they've got the day, the week, and for here I want to talk about the monthly. But just real quick, you can see these three speedometers. So right here are the oscillators. Think of MACD, RSI. There's several. And then over here are the moving averages. I think at last count, geez, I think there's 20 or 30 different types of moving averages, but the exponential moving average, the EMA, or the simple moving average, or the SMA, just as an example. But this is what I wanted to share, is that on the monthly time frame, the moving averages are screaming strong buy. Then over here, the oscillators are neutral, but the summary, this is an aggregate of the two gauges. So the summary is an aggregate of the oscillators as well as the moving averages. But right here, it is a strong buy. And I'm going to share with you right now what the chart looks like of this ETF. And you're going to see it's in an amazing, absolute amazing setup. So one of the things I love about charts, the technicals, is there's just no noise. There's no mainstream media. There's no opinions. So I wanted to share this with you. So as alluded to, this is the iShares MSCI, the USA ESG Select ETF by BlackRock. And these bars, these time frame, each one of these candles represent 1 week. And we're going back, I could go back a little bit more, but this looks like it's around 2013. So we are seeing about 10 years of history, and I want to focus right here. So let's get a tighter view. This is an unbelievable setup. So let me just share with you real quick what I am seeing. So just from the technicals perspective, so see this low right here. If we were to look to the left and draw a trend line, this makes sense. So it stopped right here on this nice chunk. Okay. Then what I want to call out is this bottom right here, right there. This is a beautiful rounded bottom. From a technical standpoint, this is ideal. This is really what you look for. And then from a pattern perspective, it looks like we've got a inverted head and shoulders pattern. And this is literally one of the most bullish patterns in all of trading. Again, an inverse head and shoulders pattern. Here's the left shoulder, head, and right shoulder. And then the neckline that we're looking at for this head and shoulders pattern is right here. And what does that mean? It's the straightest line I could draw. That means once price action breaks out above this trend line, as an example, this thing's going to be just a slingshot to the upside. And this pattern that it's in, just think of this is like the early stages of the technology sector that is currently in, or if you're aware of NVIDIA, that just broke out a few weeks ago and it looked like this, and it was literally at the neckline. And once it broke out, it shot to the upside. So this is a absolutely beautiful looking chart and wanted to make sure you had your eyes on this. I thought this was interesting. It's a little kind of a shameless plug for a recent video that I just did, and it's on carbon capture. The next big investment opportunity, there's also 14 different setups, but I also include, you can't see that right here, but there's 2 BlackRock ETFs. And the only reason why I'm bringing this up is because carbon capture, it's part of ESG. And if you're familiar with carbon capture, there's a price now on carbon. Again, there's a price on carbon. So if there's a price on anything, that means that Wall Street's going to come knocking. And this is a fascinating, up and coming, relatively new industry. And there's a lot of money pouring into this, as I mentioned. So if you're interested, feel free to take a peek at that. We cover quite a bit of surface area, and we go relatively pretty deep. And I just think this is ironic, but I have to give myself another kind of shameless plug but it's warranted. But I did another video on carbon capture. And what I was doing was I was following the smart money, and Warren Buffett, as an example, he just put in 130 million into Occidental Petroleum. And this was when I did this, Warren Buffett, Berkshire just did this about 4 or so weeks ago. But I think all in, gosh, this 130 million was just the beginning. The ticker on that is OXY. And Berkshire owns, if I remember right, I think it's around 20%, give or take, entire company. And Occidental Petroleum, they're into ESG and they're into carbon capture. So this was fascinating in terms of what is going on in this relatively new space. Just real quick on this, I mentioned this, but I just wanted to validate that this is a real source. But ESG per Bloomberg, they're saying that ESG assets may hit 53 trillion by 2025. And this is crazy. It'll be 1/3 of the global assets under management. So just think about that. One out of every 3 assets is going to be ESG related. All right, let's go a little deeper now. So let's talk about CEOs. So why do CEOs use ESG scores? There's a variety of reasons, but I thought I'd start with 3. So number 1, clean energy goals. So strong ESG scores can signal a company that they're committed to sustainable practices and reducing the environmental impact. One of the most important things to an executive team, let alone a CEO, is his or her image matters. So that's one of the things that they want to protect. Thus, they want to make sure that they've got a decent ESG score. And then attracting top talent, had to share this. ESG scores can help attract top talent who care about working for companies with strong ethical values and a positive impact on society. And then this is obvious because we were alluding to this a bit, but investor demands. Investors are increasingly demand transparency and accountability for companies and high ESG scores that can help build investor trust. So when it talks about transparency, there's several companies now like Sustainalytics or MSCI. There's a handful of them that are literally tracking and creating these ESG scores. It'll be interesting to see which one of those companies are going to be the winner, but at time of recording, there's about 5 of those that track the scores for companies. How do bonuses depend on the ESG score? Link to the executive pay. So many companies are tying CEO bonuses to their ESG score performance as a way to incentivize commitment to values and increased transparency. And I've read some position papers on this in terms of the executive pay where I've seen it as high as 30% of their entire annual bonus is linked to their ESG score. Bank loans. So a CEO, the executive team, they need a good ESG score because it's not if, but when they want to get a bank loan. Your ESG scores can impact the rewards and recognition and even the compensation that employees receive, and also the terms that these companies get for their loans. The last one, critical for the reputation. So many companies, the high ESG score is critical for a positive reputation among customers, partners, and investors and other stakeholders. So if you're with me this far, first of all, thank you. And I'm hoping that this will be worth the wait. I want to introduce a new term, Introduction to Neuromining. This is a real term. So first of all, what is it? So neuromining is the combination of behavioral intelligence and machine learning techniques to analyze human behavior and decision-making in real time. Number 2, how does it work? So neuromining uses data such as biometric signals, eye movements, and even social media interactions to identify patterns, trends in employee behavior. Why does it matter? Neuromining enables companies to better understand and predict employee behavior, allowing them to identify changes that optimize ESG metrics. So, at a very high level, that's neuromining. And now let's go a little deeper. What neuromining reveals about employees? So, number one, their unconscious bias. If you can really just listen to this, is fascinating. Number one, unconscious bias. And let me repeat, unconscious. So, neuromining can reveal unconscious biases in decision making, allowing employers to identify and address them. Compliance with ethics. Neuromining may help identify potential compliance issues such as unethical practices and discrimination in hiring and promotion. I'm laughing because the company that I work at right now, I literally personally heard this from HR that discrimination, I was literally told that probably 5, 6, 7 times that I'm not supposed to hire, you ready? I'm not supposed to hire any more old white guys. So I just laugh. It's just interesting about how some companies are trying to fumble and stumble their way with these new ESG code of ethics in terms of what they're saying out loud. But anyways, I just wanted to share that little thought with you. Impact of culture. Neuromining can reveal different culture attitudes among employees, allowing companies to foster a more inclusive and productive work environment. It's this word right here, inclusive. I get it. We do need more diversity. But again, in my humble opinion, it's not about the race, it's not about the color, it's about who can do the best job. And then to round this out, understanding employee motivation. Again, neuromining. This can help identify drivers of employee motivation, satisfaction, and allowing the company that you work for to provide more effective incentives as well as retain top talent. All right, so let's go a little deeper in terms of how neuromining can help improve ESG scores. So right off the bat, broke this down into 3 categories or 3 buckets, but the given, reducing environmental impact. So neuromining can identify behaviors that reduce environmental impacts, such as encouraging the use of solar power or reducing paper usage, as an example. And I literally just did a video. I talked about this in the Tesla video, but solar. Solar is going to be main stage here, just beginning in the next few months, over the next few years. It is literally going to take off, and you can clearly see it in terms of the fundamentals and the charts that I shared in that Tesla video for any of you that might be interested. And then right here, positive employee engagement. Neuromining can identify drivers of employee engagement, such as programs that promote employee wellness and satisfaction and inform management decisions. And then enhancing diversity and inclusion. I'm just laughing because every time I see this word diversity and inclusion, I think of what I heard from my HR department. But neuromining can identify systematic and implicit biases that limit diversity and inclusion and help management make decisions to increase both. Now, what I thought was interesting is I was thinking to myself, who's behind all of this? And in terms of neuromining, and there are several companies out there that are doing this, but one in particular that I wanted to share. So the company is called Brain Value. And Brain Value, this is a marketing research and strategic planning company. So a little bit about Brain Value. So Brain Value, they provide neuromarketing, and this is right off of their website. So they provide neuromarketing services to help businesses understand how customers perceive their products and services. And then they use EEG and eye tracking technology as an example to measure brain activity and eye movements while participants view ads, view websites, or other marketing materials. And this helps the business optimize their marketing strategies. So if anybody's in marketing while you're listening and watching me, this is interesting. So help marketing strategies to better engage their target audience. I had to share this. So, what I'm going to share with you is this is a quote from the CEO of Brain Value. And the CEO, his name is Nicholas, right here. CEO Brain Value. So, what's not in this is because I read this and it's not in this quote, but the digital consumer, clearly since COVID, the consumer has changed. And what Nicholas said on the website, which is again, it's not here, but data is not the problem. The new buyer or the new digital consumer is changing. So here's the headline: Understand and seduce a new generation of consumers, aka the new digital consumer. But this is what kind of creeped me out a little bit. I'm going to read this one more time. To understand and seduce a new generation of consumers. So, what does that mean? That means that we are making changes in how our decision making is without us even knowing it. And this is what I find fascinating. And if you become more and more familiar with neuromining and ESG, it's going to be abundantly obvious when you just look around. You look around anywhere, whether it's where you work, it's on mainstream media, it's on social media, and it's all these little subtle, very subtle changes that are literally reshaping how we as adults, and especially our children, and I just find this fascinating. And as a direct result of this, based off what I have been seeing over the last few years of what neuromining is doing or how it's seducing us, this is very effective, and I don't see this slowing down anytime soon. I'm laughing because I'll tell you in a second. Ethical considerations of neuromining. I debated as to where the heck I want to put this particular slide in this deck, but I thought this was the goodest place as ever. First of all, let me walk you through this. What I think is there's three main categories. Number one, with neuromining, there's going to be privacy issues. So neuromining raises serious privacy concerns for employees who may feel uncomfortable sharing personal information or having their behavior monitored in real time. As I read this, curious if that reminds you of anything, which I'll tell you in a second what my thoughts are. Number two, the reliability of the data. The reliability of the data gathered through neuromining is uncertain, and it may be difficult to validate the accuracy of the analysis of such data. Number three, impact on power dynamics. So the use of neuromining may create an unhealthy power dynamic in which employees are monitored and analyzed without transparency or consent. I'm laughing. When you hear me read, or if you read this one, number one, and especially number three, does that remind you of anything? And hopefully I'm not offending anybody, but if we look back on the last 3 years, from 2020 to now, especially during COVID, privacy. What privacy? And then the monitoring and analyzed without transparency or consent, that was thrown out the window. And then right here, the reliability of the data. It was just interesting to me during this window and even to this day. One, you can't question anything anymore, but then the reliability of the data, it's everywhere. I'm in the United States and I still question myself, why is it so difficult to find any solid data over the last 3 years? But anyways, I'm laughing because there is going to be ethical considerations of neuromining, but I feel like the last 3 years have conditioned us for what's coming for this new term, neuromining. Okay, I want to talk a little bit, and we're almost done, but what is behind ESG and this neuromining and this ESG scores for corporate America? So World Economic Forum, for those of you that are not familiar, just real quick on this, the WEF, it's a nonprofit organization that engages businesses, political, academic, and other leaders of society to shape global, regional, and industry agendas. So the WEF has been involved in ESG now for many years, and it's played a leading role in promoting ESG as a key driver in sustainable development. I won't go into too much detail, but there were so many headlines that I could have pulled in terms of the WEF and what they've been up to, but I thought I'd start here. In 2019, The WEF launched, they call it Stakeholder Capitalism Metrics Initiative. This is a global effort to develop a common set of metrics for measuring ESG performance. When this was introduced, it took a while to get adoption, but now it's fully adopted. And if you're interested, I thought about talking about this, but I decided not to just in the spirit of time. But if you just do a search, like on Google Bard, as an example, stakeholder capitalism, there's some really good information on that. And then in 2020, the WEF published a report on the future of work. And then they highlighted the importance of ESG in creating a more sustainable and inclusive workspace. And then lastly, in 2021, the WEF hosted a global ESG summit, which brought together leaders from business, government, civil society to discuss the latest trends in ESG. Just think of, if you're familiar with Davos, Davos is an annual meeting in Switzerland that Klaus Schwab is the host, and the audience or the attendees, just think of, when it says from business as an example, just think of all of the CEOs of the S&P 500 and of some of the other large companies across the globe, and obviously the government. Now, at a high level, let's talk about the WEF's involvement. So WEF's involvement in ESG includes, so I mentioned this just a second ago. Let me scroll right there. We go. So let's start right here. Providing a platform for discussion and debate on ESG issues. I don't know if you can see this, but this is an actual Davos meeting itself. This was the one in January of 2020. But as I mentioned, the WEF, they host an annual meeting and other events that bring together leaders from the business, government, and civil society to discuss ESG issues. And again, this is an annual event. And then developing ESG frameworks and standards. And I thought I would show a picture of the airport in Davos, Switzerland. And all of these jets are from the attendees, aka, as an example, the CEOs that all fly into this little tiny airport in Davos, Switzerland once a year. But the WEF right here, they've developed a number of ESG frameworks and standards, including stakeholder capitalism metrics, initiative, and a global compact. And then again, these frameworks and standards provide a guidance to businesses on how to integrate ESG into their operations. It's basically like a book for dummies for workplace and ESG is what I want to say. And then to round this out, advocating for ESG policies and regulations. I'd say this is probably the one that worries me the most, and here's why. So the the WEF advocates for ESG policies and regulations at the national and international levels. The WEF believes that ESG policies and regulations are essential to driving sustainable development. So right here, ESG, the WEF, they basically have a seat at the table to talk about policies, regulations, again, at the national level, depending on which country you live in, where you're watching this. Are they at the seat at the table for the government of where you live? And then more importantly, or in addition, at the international seat. So they are everywhere. And as we watch mainstream media or say social media, there's all these distractions. And while all these distractions are taking place, we have this going on behind the scenes. So this is the last page in the presentation. I thought I'd leave you with this. If you've made it this far, first of all, thank you so much. But if you've made it this far, you probably have an interest in going a little deeper. And I wanted to share a book with you that I read back in late 2019, and it's called The Age of Surveillance Capitalism. And Shoshana Zuboff, and I never get her last name right, but Shoshana, she is one smart woman. She is a Harvard professor. Golly, I learned so much from what she put into this book, and it really woke me up. The theme of the book is how surveillance capitalism is being monetized. doesn't necessarily dig into ESG per se, but this is a wonderful theme that complements ESG and the importance of the data that is being sold underneath the surveillance that we are all literally being watched, observed, and listened to. There was a stat I'll leave with you too. I heard this back in, say, 2015, back in my IBM days, and I thought there's no way this is going to happen. But when I heard this, and the stat is that right around the year 2025 through 2027, the average household in the US, again, average, is going to have over 500 Bluetooth devices in a home. And I was thinking, how is that possible? With everything going on, and everybody's been stuck, per se, at their home, I can easily see now why that homes are going to have 500 Bluetooth devices, if not now, soon. And just think about what those Bluetooth devices can do, let alone think about Apple. Like, Apple's one of the very few companies that can actually track our heartbeat, which is good. And then in some cases, it may not be so good. So anyways, hey, thanks so much for sticking around. And I hope you found that helpful in terms of ESG and how ESG is affecting and impacting CEOs and their teams' annual bonuses. All right, thanks so much. That's a wrap.